Being a generalist makes you think from first principles. Europe has amazing talent. I think specifically the UK has amazing talent in AI.
A lot has changed over the last 18, 24 months.
We used to talk about 10x software engineers. You're now talking about 100x, 200x.
Hi, I'm Tom Guinness and welcome to the Raising Europe podcast. Here we go behind the scenes with the people building the future of European tech. Today we welcome Fred Ursell to the show. Fred is the head of investments at Pembroke VCT, the UK-listed venture capital trust with £200 million assets under management and over 50 portfolio companies. If you want to learn what it takes to invest in early stage companies in the UK, you don't want to miss this. So Fred, it's great to have you on the show today. How are you?
I'm very well, thank you. Yourself?
Yeah, amazing. So why don't we start off with you? Why don't you tell us about your story and where did you get to where you are today?
So I've got I think a somewhat interesting story before university, and then post-university very boring. So maybe I'll start with the interesting bit. I grew up on a council estate and didn't know what venture capital was. So it was like if you put me against most of my colleagues, kind of very different background. Right. So I left school as soon as you could, tried to become a plumber, and that was in 2007 to 2008. Yeah. I didn't realize that it would be very hard, or I didn't foresee the financial crisis coming, and that at 2008 that no one would be hiring plumbers. So I finished my course, had to change tact midway through between the first and second year, finished my first year, and pivoted to do sports science. Left it, completed college, and then went to work in a local supermarket and just worked there for a few years. And I thought, well, that was me, done, dusted, that's my life. Yeah. I went to my friend's house and he was applying to university. I was like, oh, that's interesting. And he said, hold on a minute, Fred, you've been to college, you've got those UCAS points that I've got, and you could probably apply. Why don't we, you don't love your job at the moment, why don't we go to university? And that was a bit of a strange concept. So there and then on the day, decided I was going to apply for university. We went through clearing. So we got the yellow pages out, got the numbers of all the universities, phoned them up, started at the bottom, worked our way up until we got to, I got to London South Bank, he got to another university in London. And then post-university, very boring story. So I did business with finance pathways, got an internship at a bank in a summer, and then worked in corporate finance on a grad scheme post-university. Right. But there was a very different story for me at one point where I could have been doing the plumbing and maybe the HVAC room here.
Wow, that's some story. That's a very different story to most of the other investors that I've met. It's very inspiring actually to come from that background to completely pivot, and now you're the head of investments at Pembroke VCT. So how would you describe your investment philosophy without using any cliches?
Yeah, the cliches bit makes this a hard question because I lurch towards people. Whenever anyone asks me, what do we invest in? It's always people. So putting that aside, parking that, sneaking that one in there, I would say second, it's all about business model. So as an investor in both technology and consumer, the consumer being the key point here, we have learned that business model is really everything. So we spend an inordinate amount of time focused on how the company makes money or will make money in the future through its business model than I think most of the other investors. So I would say our philosophy is back great people, obviously. There's not much else there at the stage we're investing. Make sure they're driving or will drive a great business model. And then thirdly, it has to be a big attractive market for us to get excited. They're the kind of three key tenets for us, and that's our philosophy. Beyond that, we're quite a generalist investor. So we're not very thematic, but those kind of three core traits are really important to us.
And so when thinking about those core traits, if we take a step back and look into the future, over the next decade, what are your biggest fears and convictions in investing?
I'd say the biggest conviction is that Europe has amazing talent. I think specifically the UK has amazing talent in AI. And then my biggest fear is that we scare that talent away and force them to go elsewhere with the structural changes that we're making to the VCT rules or threatening to make to the VCT rules to the way our capital markets are, forcing founders to go to further places to raise money, and then some of our other policies around tax. It does frighten me a little bit that we've got this amazing talent that we should be nurturing and funding, but we're going to scare them away.
Right, so that's the biggest fear. But when it comes to the biggest conviction over the next decade, where do you see that? I
mean, it's hard not to use the acronym AI, isn't it? You kind of have to, but ignoring that one, because I think that's quite obvious and quite well known, I would say that consumer brands providing experiences and things that can't be replicated. I think all the advancements in AI are going to drive us to spend a lot more of our time in software and in digital environments. But I think the area that we're forgetting is that we're still humans at the end of it, and we have our wants and needs and desires. And so brands that provide experiences, travel, retail that again provides a great experience rather than just the transaction. I think that area is going to be pretty exciting.
Right. So as people, inhabiting the physical environment and having a physical experience is where you see, a lot of where, you'll want to invest over the next 10 years.
Yeah, community, all of those kind of really important things for a consumer brand, I think is going to be a pretty good area to invest into.
And when we talk about the acronym AI, what do you think the new thing will be? What will be the next AI?
I've got no idea, frankly. We are just amazed at what's currently here, to be honest. Even from how we're using it internally, which as a small fund is definitely not at the cutting edge. But what we are seeing internally, what we're seeing our companies do, it feels really new at the moment. It feels like we're just getting started. We're just kind of starting to get our arms around what's going on. So to look beyond that is definitely not something that I can do. I say we back the people who are able to see a couple of bounces of the ball on, and that comes back to our generalist thesis of we are not the brightest and smartest people in the room. The founders always are. We're backing them. We're kind of shoulder to shoulder alongside them, building conviction in their thesis, which is the new thing quite often. But yeah, we're certainly not the people to predict the new thing.
And touching on that point, a lot has changed over the last 18, 24 months. How has that time period impacted your investment beliefs or philosophy?
I think we were investing a lot in B2B SaaS, software as a service, a few years ago, and that space looks challenging right now. And I think you have to be very specific about the software that you're backing. It's easy to see how big software companies and big vendors can be disrupted quite quickly with the kind of margin or the barrier to entry, really eroding. The cost of developing software, the speed of developing software is all kind of coming further and further down. So thinking about defensibility in a new world that we're now currently operating in has definitely changed significantly over the last 24 to 18 months.
Right. And if we look further back, to the beginning of your career, what's one investment belief that you had at the start of your career that you now think is completely wrong? The
target addressable market, or TAM, is everything. I would just, as a corporate finance guy, as a numbers guy, I would be obsessed with TAM modeling and just saying, look at the size of this market, it's just never going to be big. And if we win 2% of this market, we're just never going to get the return. But we've learned over the years that the best founders, if you back the best founders and they have the best teams around them, they will pivot. They will have a second go. They will create a new market. Even our consumer brands, one of our consumer brands, Plenish, was selling cold pressed juice. It's quite expensive. Realised there was a certain market size for selling cold pressed juice. She pivoted the business into a nut milk brand, challenged Alpro, who was the kind of leading provider at the time, and created a very big business that was then bought by Europe's largest drinks business. So our original thesis, if you'd have said, okay, look at the TAM, look at how small that cold pressed juice market is, we'd have probably never made the investment. But if you thought, okay, we're backing a great founder who's able to see and really understand the market and pivot the business, we would have made the investment all day long. And so experience has taught us just back great founders, and that's why I think it's, for us anyway, it's the people, then the business model, and then lastly the market, not the other way around.
And speaking about the people, how is today's market environment impacting the next generation of founders in Europe?
Well, we're about to back a company that has 2.5 people, and it's very quickly scaled to hundreds and hundreds of thousands of pounds in ARR.
Wow.
And it's just something that, like, the revenue per employee metric is really popular at the moment, because it makes some companies look incredible, and we are seeing that in droves. And I think we used to talk about 10x software engineers, you're now talking about 100x, 200x, and maybe it's not even software engineers, maybe it's people that aren't that technical, that are able to build fantastic products with their domain experience and quickly scale them. So I think we're seeing a real change in the talent market. You're not needing such big teams, and to scale that line of your OpEx, you're seeing different lines of the OpEx scale. But it's very interesting trying to think how you're going to value these companies in the future. If you've got one person founders selling their businesses for £80 million, what's the buyer buying? So it's a fascinating time.
So what is your framework for identifying a must-back founder?
It's really hard because this is the founder is a lot of gut feel.
Gut feel.
But we do some structured work around it. So we instruct a third-party management due diligence provider who come in and do all sorts, from psychometric profiling to interviews, structured and non-structured, references that are named, but also secret backdoor references. And I remember the first time I read one of these reports, it was quite hairy at points, actually.
Really?
And I took it through to our investment committee internally and said, I'm a bit worried about this. And my CEO, Andrew, said to me, Fred, what do you think would happen if we put Elon Musk through a management due diligence exercise? Do you think he'd come out smelling of roses? And so we do kind of rigorous management DD, but you have to also take it with a pinch of salt, because founders are spiky. And to come back to your question, that's really what we look for. Are they really spiky in one area? Do they over-index? Are they world-class in that one area? And secondly, then, are they self-aware? Have they spotted that spike and said, okay, I'm great here, but this underbelly I'm not very good at, and so I've hired a great COO and a great CFO, and actually as a whole picture, we're really strong across the board. When you've got a founder like that, you can get really excited about the opportunity to work with them.
Right, so it's very much founders need to be spiky in one area, but have also assembled a team around them to kind of make up for their weaknesses. Yes, but maybe they don't have to have assembled the team. Maybe it's an openness and awareness to say, look, we're raising this round now to hire the COO and the CFO, because I know that I'm starting to see things creaking here and there, and I really value that support. So it's the openness to working with other people, being a bit self-aware and spotting their blind spots, but whilst not blunting themselves of that big spike and saying, look, I'm world-class at selling, or I'm world-class at building technology, I want to focus on that. I don't also want to manage the finances or the operations. Focus on what you're good at is what we love, but then also some kind of level of self-awareness to say, I could do some support. Right, and we all know the founder who's an excellent storyteller and bigs up their spikiness, as we'll put it. How do you distinguish between a founder's storytelling skill and real substance?
I think some of it is numbers. So I always, as an ex-corporate finance guy, I always think about the equity story.
Yeah.
So, and that, what I mean by that is, what's the story that the founders, as you said, is storytelling, is pitching in the meeting?
Yeah.
Okay, great. We can all get behind that thesis. Sounds brilliant. Let's go and spend some time in the data room. If you claim that your product is so important to your customers, but then you've got really high churn, that doesn't quite stack up. Or if you're saying that everyone is just desperate for it, really needs it quickly, but your sales cycle is six months, then it's not quite computing. So the way we try and get around the storytelling is, okay, great, believe in that statement, let's dive in and work through the numbers to see what if you're actually saying is showing up, because it might be something else. There might be something else great about your business, but it's maybe not what you were representing at the start.
Right. I think some founders may misunderstand the equity story piece. It's very important to make sure that all parts of the equity story make sense, both the storytelling side, but also the data room, the hard numbers to make sure it's all congruent.
Yeah, completely agree. It is massively overlooked. People think that, yeah, just growth. That's what investors, they just love those hockey stick graphs. But no, there's a lot more to it than that.
So what founder did you miss out on investing in that you wished you'd backed?
Feels kind of strange to name someone who probably hasn't thought about us since. But the one that sticks out in my mind is Freddie, who's the founder of Wild Deodorant. So
Right.
We saw him twice painfully and said no both times. And at the time, the reason we said no was, Freddie was incredible. That's not the reason we said no. And we debated, oh, he's so good. Look at his background. He worked for HelloFresh. I think he was one of the first employees there. And we came out of the meeting both times saying, he's brilliant. He's backable. But the product was selling natural deodorant, direct to consumer, quite expensively. And one of the issues with it was, we thought was that there was a period where the consumer would have to smell. So that they would have to change from an antiperspirant, which stops you smelling. And there was a 2-week adjustment period where you would smell a body odor, but eventually it would be worth it.
Right.
And so we thought that there were 4 big barriers to ever buying the product. And we just couldn't see a world in which people are going to pay more, buy deodorant online instead of as they would in a retailer, believe in this ESG story, and also put up with smelling for 2 weeks. We couldn't get our heads around that, and we were wildly wrong, to use a pun. The business was sold to Unilever, I think north of 200 million, and we had a chance to invest at a very low valuation. So that one pains us.
But it's interesting that you say it's not the founder. It's the business model was the important bit, and the way that people use the product.
Yeah, but I think we were just probably trying to be a bit too clever. So it's a good lesson for us that if you've just got a great founder in a big market that does need disrupting, and it clearly did need disrupting, back them.
When we think about backing founders, clearly other investors backed Wild, and that was very successful. How does Pembroke stand out in a competitive market, and what is Pembroke's unfair advantage?
It's probably threefold. Firstly, we were founded by entrepreneurs, and we've just got this entrepreneurial culture and DNA running through the veins of our business everywhere you look. So small things like our investment process is designed with the founder in mind. We try and do investment committee quite early on in person with the founders, because we think, one, that gives the founders the opportunity to meet, shake hands with, get comfortable with our investment committee. It's not this mythical committee that don't ever see a meet management team. Yeah. We do that quite early on to give the founders confidence that, subject due diligence checking out, that we're going to make the investment. Whereas lots of other funds, they wait to the end of the 3-month process to say, oh, we've taken it to investment committee and they've said no for a certain reason. And by that point, the founders dwindled the cash balance down and they're in a sticky situation. So across our business, we've thought about the entrepreneur, and it comes across in our term sheet, in our process, lots of things. Secondly, the fact that we're a generalist, we think that's a real advantage. Being a generalist makes you think from first principles. So you can't just say, well, here's the SaaS playbook we've used for 10 years. Yeah. And right now you'd be saying, oh, my SaaS playbook is considerably out of date with AI coming in.
Definitely.
So always thinking about things from first principles. And then thirdly and lastly, we're a VCT, Venture Capital Trust, which is a vehicle that's listed on the stock exchange. But the relevancy for the founders is it's a permanent capital vehicle. So it raises money every year and doesn't have a hard timeline on we invest and then 10 years later we need to be forcing the founders to sell. Yeah. So we're patient capital, which is a really strong advantage when we're pitching against the GP/LP structured funds.
So when we think about investors today using AI tools, how data driven is the team at Pembroke, and what kind of tools are you using to source deals and also analyze investments?
Varies probably person to person. Some people are very entrepreneurial, more gut feel. Some are a lot more data driven. But I would say as a whole, we're probably quite data driven because of the stage we're investing in. So we're investing at that Series A stage where something is working. We're pouring fuel on a fire that's already burning. And so we need to understand the fire to be able to understand what's going to happen when we pour the fuel on. So we're quite data driven, but at the same time, we we do really overemphasize on the founder. And so if there are a couple of data points that are saying to us, oh, be careful of that, or that's a risk, we probably still proceed with the investment despite some alarming data, if there are enough really kind of outlier data points that say, okay, this is a really backable opportunity.
And so when it comes to using AI tools for sourcing and analyzing investments, what kind of tools are you using?
We use tools like Bohurst, PitchBook, the usual databases. We're starting to look at some of the emerging kind of identifying sourcing tools, but a lot of our sourcing really comes from network.
Yeah.
So it's about being in the founder communities, speaking with people. It's still that human element. I think the sourcing and the filtering software is developing at a rate of knots, and in a few years' time will be very, very strong and very, very exciting. But I think there's a real advantage to be had in building great relationships with founders, being that trusted investor, and having your portfolio company say, "Oh, you're raising. Well, go and speak with Pembroke."
Onto the founders that you have backed. How do you like to work with the founders you've invested in, and how does Pembroke add value beyond capital?
I would say we lean towards them, and some will lean back and say, "Great, look at all this support, bring it on," and some will say, "No, I'm okay, thank you." So we don't have like a one-size-fits-all playbook. You must follow this process. This is how we engage. It's very kind of case driven. There are some founders that I'm constantly speaking with them about this, that, or have you seen that? I'm negotiating this lease, or this is coming up, or how can we talk about it? And then you've got some founders who want big, substantial engagements at board level and kind of keep it there. So it really does vary. But I would say we just like to try and be there as much as they want us to be there without getting in the way. And then how do we add value? We've got a value creation team, which is kind of unique for a VC of our size to have, which has three main pillars to it. So firstly, we've got an expert in go-to-market. So he scaled an AI business before AI was cool, sold it to a Silicon Valley publicly listed company, and then worked on the take private with a PE. So he's been through the whole journey and can work with founders on that scaling journey. The second limb is talent and people. So we're helping our founders hire. It's often a chair, it's often a CFO at the stage we're investing, but really going beyond what basic recruiting does and just giving you lists and really trying to talent match and bring the best people in that are culturally going to work well. And it's a great process from doing our DD that I spoke about earlier, our management due diligence, to kind of hand that over to our talent team and say, here's the exact kind of person that would work well with this team. So the second is people. And then lastly, it's on the corporate finance side. So it's how do we help our companies raise the next round? What's the equity story? What's the financial model? What's the deck? Who are the investors we need to be introducing them to? And also not just raising money, but also on exit. So they're the three ways in which I'd say we really add value.
And so when you think about the role of the VC today, what do you think that would look like in 2030?
Well, some people are saying it's the last job, aren't they? VC is going to be
some very famous VCs.
The last job. I don't know. I think we spoke about it briefly earlier, but I think sourcing and identifying companies is going to be quite easily automated. That feels very obvious. We're starting to do some stuff there. Writing, the kind of doing the outputs of the due diligence, writing that up, naturally feels like somewhere that LLM should play. Yeah. But for me, writing is thinking, and that is where I really build conviction. So I can understand the efficiency gains and the needs for having tools to write the investment memos, but that for me is where I really know if I back an investment when I'm writing a teaser or a longer document. So I wouldn't want to lose the writing. But I do think a lot of the administrative menial tasks will be automated, allowing us to do the important things, which is spending time with the founders, trying to work out if they're the ones to back. And then once we have backed them, spending time with them, helping create value in the business and being their kind of confidant and advisor.
And do you think venture is becoming more founder-friendly or less?
I think it oscillates, doesn't it? And it does definitely vary. Like clearly a couple of years ago, it wasn't very founder-friendly because venture wasn't a good place to be. now with AI, it's an amazing place to be. And if you're looking at how these companies are being invested in or bought, and the kind of arrangements for the talent to join these large businesses, it feels very founder friendly. But that's in a small world of AI, a small but growing world of AI. I think if you flip that and looked at the consumer space, it's been a hard time to raise as a consumer brand for the last few years because everyone is so hell-bent on just investing in AI. And so the terms, the valuations, the availability of capital for consumer brands has been tougher, and I would say probably less founder-friendly for the consumer founders. So it's a tale of two cities.
Right. And do you think where the markets are today, do you think we're slowly turning towards consumer more, or do you think everyone is just piling into AI?
I think everyone's just piling into AI, to be honest, and rightly so. Like the stuff it's doing is incredible, and we are too. We're heavily investing behind it. But I think people are neglecting and just completely forgetting that there are humans still on the planet, and humans will still continue to exist and have wants and desires. And I think there's a really exciting area to be investing in consumer brands and experiences that is just being completely ignored by 95% of VCs.
It's a great opportunity.
Yeah.
And so based on your experience to date, what advice would you give to the next wave of founders and VCs?
I'll focus on VCs, but the advice I would give would be form an opinion. So I would say we're paid to give our opinion, but when you're just starting out as a VC, you want to do the best analysis and figure out the edge for the investment case or the big hairy risks in the model that no one spotted. But you don't then think about, okay, I found those risks or I found the case. What do I then need to do with that bit of information? How do I change it to convey either internally to the IC or to my team or maybe back to the founder? And so for me, one of my early managers gave me a great piece of feedback, said, Fred, all this work you're doing is great, but it's useless. What am I doing with it? I'm then having to spend some time polishing and working with it. And so I started working on doing 3 separate notes, one for the founders, one for the rest of the team, and one for the IC with the analysis I did. And that really helped me. I would start with then, okay, what do I think about this information? And it would help me to start to develop my opinion, which is really important to kind of get a muscle of being able to develop that opinion quickly. So
outside of VC, what do you do for fun?
I don't look it, but I'm a road cyclist, by far the heaviest in my group. So I'm unfortunately one of those mammals, part of a cycling club. Sundays is non-negotiable. First thing Sunday morning, we're out on a long bike ride.
So for our listeners who don't know about mammals, that's middle-aged man in Lycra. And I'm also one of those. I've been cycling for a long time. What kind of bike do you have?
I've got a niche bike, a niche road bike. It's a Pearson, which is small family brand in southwest London. But it doesn't go very fast.
Oh, any reason you picked Pearson?
I just love the heritage. I bought it off of Guy Pearson, 4th generation Pearson, still in the shop, selling the frames. And I just thought that was cool. Like the Giants and the Treks, they're everywhere and they're great and they're arguably better value, but you don't really see a Pearson very often.
It's funny how, backing founders has kind of also gone into your into your time as a road cyclist.
Yeah,
with your bike. Every time you're on the bike, it's backing a founder.
Yeah, exactly. The
or family business, at least.
Looking for an outlier, yeah.
So if you weren't a VC, what would you be?
I'd love to have been a professional boxing trainer.
Boxing?
Yeah, I was massively into boxing as a kid and as a senior a bit during university as well. But I was probably never good enough.
Who's your favorite boxer of all time?
It's hard to not say Tommy Hearns. Amazing fighter, amazing style, all action. You don't often see a boring Tommy Hearns fight.
What's the funniest thing you've seen during your time as a VC?
Now, this is going to make me sound mean, but I was once pitched a Batmobile.
Batmobile?
Yes, and it feels mean, like laughing and joking about founders. I should be better than that, but it was just the level of depth and rigor that had gone into this pitch. So it was something like 9 meters long, 6 wide, and apparently Aston Martin were going to be making this thing. And I sat down with this gentleman who was really passionate about it. My first question was, is this road legal? I said, no. People who want a Batmobile don't need it to be road legal. And it was just a very interesting meeting, which whenever someone asks what's my kind of wackiest moment in VC, it was definitely the Batmobile pitch.
It's amazing. It's funny to think that with the likes of McLaren, Aston Martin, Rimac as well, their modern hypercars almost seem like Batmobiles.
Yeah. So maybe it was onto something. Maybe it just didn't have the product market fit.
So what are your top 3 films of all time?
This is embarrassing, but I'm a big Love Actually fan. So I would go Love Actually, 𝐤𝐤𝐫𝐤𝐿, and maybe a really boring, it's probably top of all the list, but 𝐿𝐸𝐵𝑆ℎ𝑎NK Redemption. Love that film.
So top 2 are British classics.
Yes.
And then we're going a global classic.
Yeah.
What books would you recommend to others?
I love The Compound Effect. It's my favorite book. Just completely changes your mind on, changes your thinking and your kind of mental models on compound interest. So thinking, they give an example in the book of, what would you rather, a pound that doubles every day for a month, or 6 or 3 million pounds on day one? And you obviously lurch towards the larger number, but actually the doubling of the number every day turns out to be the way bigger number. And it's really hard to fathom and they give tons of examples of this about like losing weight, for example, about eating a biscuit every day and the amount of calories that amounts to every year. It's a fascinating read.
That's amazing. Well, Fred, thank you so much for joining us on the show today. It's been a pleasure.
Thank you. It's been great.
And yeah, wishing you and the team all the best for the rest of the year.
Thank you very much.
I have a quick favor to ask you. Raising Europe is a community-supported channel. If you find that our content has been valuable to you or has helped you in any way, please hit the subscribe button. It's one quick, free, easy way for you to support the channel and help us make our production better each and every week. Thank you so much for joining us on our journey so far. Without you, none of this would be possible.